So what are the different pieces? What's in this monstrous bill?
Yeah.
So one big piece of it is individual relief. And for every American in the country who makes under $100,000 a year, you're getting a check. You're getting a check in the next couple of weeks. Individual adults are getting $1,200 each. A couple's getting $2,400 each. And if you have kids, you get $500 each for those kids. And those checks are expected to go out. According to the Treasury Department, they're going to get them out in 2 to 3 weeks. So sometime probably early to mid-April is when those checks are going to arrive.
And correct me if I'm wrong, this is unprecedented, right? I mean, we've never seen the federal government mailing checks to this large a number of Americans for direct relief.
The only thing comparable to this was during the 2008 crisis. There was a smaller set of rebate checks that were sent out under the Bush administration, but it wasn't nearly as significant as this. This is much more broad-based, and these are bigger checks. Look, if you look at restaurants that have been shut down all across the country, you look at bars, you look at hardware stores or nail salons, there are a lot of people who are hourly workers who suddenly finding themselves at home and are scared. Right. How am I going to make the rent check next month? Right. How am I going to pay the basic expenses? How are we going to pay for food? And so these checks are providing relief on a broad-based manner. It's not picking winners and losers. It's providing it across the board. Most economists agree that's not going to be a major stimulus effect, but it is going to help people who are worried and being hurt by this right now.
Right. I mean, people, they can't afford to not work for a month or however long this is going to go on. So the idea is that's going to fill the gap. And hopefully you can take $1,200 and put it toward your rent or whatever bill is due. What else is in the bill, especially in terms of, I know it was controversial that there's a loan program for businesses to stay afloat. The Democrats were very against that. What does that program look like?
Well, let me get to another major part of the bill that I think is really important is there's $377 billion for small businesses. And this is an emergency loan program that is going to go to small businesses, essentially businesses with 500 employees or less. So the hardware stores and barbershops and restaurants that we talked about, all these folks that are shuttered right now and are on the verge of bankruptcy. You can now go, if you're a small business owner, you can go and apply for a loan and you can get it. It's a Small Business Administration loan, but you can get it from your local bank. It's from all of the local banks in the community that you can go and apply for it. And it's up to $10 million. So it's small loans, relatively speaking, but they're designed in particular to meet costs like payroll, to meet costs like rent, the basic costs that you have that you don't want to lose your business. And the way it's designed, if you spend the money on payroll, if you say to your employees, we're going to keep paying you, we're going to keep your paycheck coming, then those loans are forgivable. So for the small business owner, you can take the loan, and if you actually pay it out to your employees, the loan obligation goes away. And so that's a direct lifeline to these small businesses that are profoundly hurting. And a lot of them are making the decision right now, do I stay open or do I shutter the doors?
Right. So well, I'm sorry to interrupt. I mean, this is a very important point here because, as we see the unemployment rate ticking up, you had claims last week for unemployment that were comparable, if not higher, than you saw at the peak of the 2009 crisis. I mean, you could have massive unemployment. You could have businesses falling apart. So this would allow the businesses to continue to employ their workers.
Right, and that means people keep a connection to their job. It means they keep their health insurance, which is a big challenge for everyone. If you lose your job, you may be losing your health insurance. So we'd rather as many people as possible to stay employed, to stay in a position that when we get past this crisis, hopefully sooner rather than later, that everyone go back to work, that we want to get the economy moving again. And so these small business loans, again, are unprecedented. I mean, to give you a sense, the Small Business Administration's budget, I think last year, was $23 billion.
Yeah.
This is $377 billion. So this is more than 10 times the size of the Small Business Administration's entire budget. But all of that money is designed to flow out through the community banks to small businesses and to be used for payroll predominantly and other essential costs like rent and utilities just to keep the businesses open.
So, well, I know that this brings up another question on employment that was really central to the debate today, and you played a central role in this, which is some Republican senators, I think Lindsey Graham mentioned it, and you spoke out very forcefully against it, identified in the bill a provision that would actually incentivize people not to go back to work. What was that provision, and where does that stand right now?
So part of this bill, and one of the things in particular the Democrats demanded as a price of supporting this bill, was increasing unemployment insurance compensation. So when you file for unemployment in your states, the federal government is plussing up those weekly compensation, and plussing it up dramatically is basically adding $600 a week to what you can earn from unemployment. So,
wow.
so what does that mean? And listen, most Republicans, I think that is a good thing. We're going to see this week when the job numbers comes out, we're going to see millions of Americans who have lost their jobs in the last 2 weeks. I mean, it has been, I've spoken to at least a dozen CEOs in the last week who've laid off thousands or tens of thousands of employees. I mean, it's just one after the other after the other. And if you're suddenly laid off, having unemployment and enough to support your family is important. So I think plussing it up made sense. Here's the problem. The way it is designed, the $600 is irrespective of what you were making before, which means, like, I'll give you an example in Texas. So right now in Texas, the maximum someone can make on unemployment is $521 a week. That's what the state unemployment will, and that's based on your income. Yeah. We're now adding $600 a week to that. So instead of $521 a week in Texas, it's now $1,121 a week.
It's a nice raise.
That is a very nice raise. But here's the problem: there's no constraint on whether it is more than you were making in your job, and so. I and a number of other senators, we introduced an amendment today, just a common sense amendment that said, look, you should not make more on unemployment than you were making working.
It's common sense, right?
And we had, so we debated it on the Senate floor. It was interesting. Actually, an astonishing thing broke out on the Senate floor, real debate. Dick Durbin, Democrat from Illinois, was arguing back and forth. And our amendment just was a simple proposition that you shouldn't be paid more in unemployment than you were making in your job. And the reason is you don't want to disincentivize work. I'll use the Texas example. $1,121 a week, that's a little bit over $58,000 a year. Now, it's 4 months worth, but annualized, that's $58,000 a year. That works out to over $28 an hour. The problem is, if we're paying people that much not to work, it incentivizes people not to work. And it was very
Why would you ever go back to your job?
Well, and the back and forth. So Durbin did what a lot of Democrats did, which is he demagogued. He said, oh, these Republicans are saying anyone unemployed is lazy and rotten. And I said, hold on a second. We're saying exactly the opposite, which is this policy will hurt workers and it'll hurt small businesses. Why? Let's say you're a waitress and you've been laid off from your job. You're getting unemployment, but suddenly you're making $25, $26, $28 an hour at home not working. And you face the decision, do I go back to work for $10, $12, $15 an hour? We're creating incentives where it would be perfectly rational to say, I'm not going to go back to work because I make a lot more money on unemployment. That hurts the workers. It also hurts small businesses. Let's say you're trying to reopen your restaurant. The shutdown has stopped in your city. You want people to come back. You call up your old employees and they say, look, I'd love to come back to work, but I can't afford the pay cut.
Yeah. You got to match my unemployment salary.
So that, I think, was an unfortunate mistake, and we ended up, the amendment lost. It was basically a party line vote. I think every Democrat voted against it except Joe Manchin. He was the one, yes. But I think that was unfortunate, but it nonetheless, there will be significant benefits from the additional unemployment insurance in this time of crisis.